Happy Diwali, and I'm just wondering, how would you like to do some Diwali cleaning? Okay, sorry, I got it late. Last 1 week or 2 weeks, you must have spent a lot of time in cleaning up your house and making the house look great, getting your servants to do some cleaning, you contributing to it, you doing some cleaning, right? You'd have done all that. So how about some Diwali cleaning for your portfolio, right? You have an investment portfolio which you have created, we all have created, and how about some Diwali cleaning for it, right? So, and if you don't know where to start, well, you're in the right place, you're in the right video. So first, make a inventory of all that you have, all your insurance policies, your provident fund which is lying in different companies where you have changed jobs but you have not consolidated, your real estate papers, your everything put together. I mean, I'm not saying physically, make a list of the things that you own, right? So first step is calculating your net worth. See how much is your net worth, write down. So investment in mutual funds, liquid funds, debt funds, right? All of that put together, direct equity if you have, bonds if you have them, then bank fixed deposits, insurance policies, provident fund balance, PPF balance, NSS balance, right, or all that. So you then come at an inventory, and similarly you arrive at all your debt inventory in case you have home loans, car loans, personal loans, credit card loans, what have you, right? So all that if you have, then make a list. So your assets minus liabilities is your net worth. So net worth calculation should be the step one for your Diwali. And then you start breaking out and say, oh, I've got 5 savings bank accounts. I opened this when I was in Delhi because I had a job there and they asked me to open in Delhi branch. Unfortunately, it's a PSU bank, but they allow me to deal here, but for everything I have to go to the branch. Shut down that account, right? So make an inventory of your 5 or 6 savings bank accounts, fixed deposits lying in different places. Now thanks to 26AS, if there is a tax deduction, you at least get to see what is there, so you can get in touch and know that an FD like that exists. Some people even forget, so that shouldn't happen. So make a list of your bank fixed deposits, make a list of your mutual funds. Find out how much money do you really need in an emergency. Maybe you're 55 years of age, both your children are now left the house, they're settled wherever they are, maybe they're abroad, maybe they're in India, and you realize that they are doing well and they know how to manage their lives. Your requirement of the emergency fund keeps falling. But you also understand that one illness like a liver failure or a kidney failure can set you back by 20-30 lakhs. And you may have only 5 lakhs of insurance. Maybe with a super top up you may have another 15 lakhs, you may have only 20 lakhs, and your bill could be 22 lakhs, right? So any of these things could happen. So some emergency money is necessary, but all the money being kept for an emergency doesn't make sense. Then it's a question of liquidity versus profitability. When you have too very high liquidity, your profitability suffers. If you worry too much about profitability, your liquidity suffers. So you have to have a midway balance between the two, where you have enough liquidity to the extent that you need, and you have decent profitability of say 14%, assuming that inflation in India is about 10-11%. Right? If you assume that the inflation rate in India is about 6%, then you're looking for only about 8% return in equity. Fine, suit yourself, see whatever it is. But now that you have made an inventory, put a value to it and arrive at your net worth. And remember, next Diwali you should be comparing today's net worth to that day's net worth. The only thing you have to see as an investor is your net worth increasing. If you have more liabilities, that's fine. If your property that you bought is appreciating, if you're getting a better return than the rate at which you're borrowing, you're doing very well. But if the return that you're getting is worse than the rate at which you're borrowing, it's time you sold off that asset and repaid the loan, right? So inventorizing all that you have forces you to look at every asset at least every Diwali and say, do I need this second house? Do I need this house in Bangalore? Do I need this house in Coimbatore? Anyway, I'm not going to leave Bombay. Get rid of the other assets, because by the time you march to your 70s, which means you're 62, 63, 65, whatever, keep on simplifying, because your energy levels to deal with all this nonsense will keep going down. I have one mutual fund, I don't want to name them, they send so much of physical literature that it actually goes straight to junk without it even being opened. right? I prefer all the communication be electronic, but you will be inundated with papers from mutual funds and they may be completely useless. But if nobody else in your house knows how to handle it, all this would be accumulating and waiting for your attention. And believe me, with increasing age, yes, you have more time, but the ability to comprehend and handle all this keeps going down. So make sure that your mutual fund or insurance company deals with you only in electronic mode, because in the worst case scenario, those documents can be retrieved. And while at it, also get to see how much are your debit card, credit card debts, all that. I mean, debit card can't have a debt, but your credit cards enlisting their maximum balances, how much you're withdrawing, how much you're using, whether you're paying on time, right? So review all your accounts, savings bank, fixed deposit, credit cards, whatever, wherever there is multiplicity, see whether you need to reduce. Right now I'm very happy that I have 2 cards, because my one is an international card with 12 digits, with 14 digits, and the others are 16 digits. And anywhere where you're trying to pay electronically, you need 16 digits, right? So you have the option of having a international card, and a national card is there, but international card is not accepted for payment in many places. So be careful about that. Make an inventory of all your expenses also, if you think there is something which you can reduce. For example, you're 57 years of age, both your children have now settled. Maybe you don't need life insurance, maybe your wife has adequate money, so review that. Maybe you don't need life insurance, but you need more medical insurance, so do a review. That is what inventorizing helps. When you inventorize, you tend to look at it and say, okay, now let me do this. I don't need this asset, or I do need this asset. Make sure that you keep on reducing your debt, because that's one way of improving your net worth. But if you are earning very well and you know what you're doing, a leverage position is also okay. Here I'm contradicting myself. I would never do a leverage position, but some people like to do a leverage position. Be my guest, right? Do you think reverse mortgage helps? Don't bother about all that, but make sure that your mortgage papers are in place. You may say, oh, I'm never going to need it, I'm always going to live there. True, perfectly true. But what happens in case you want to either sell it, or you want to rent it out, or you want to put it as a pledge and borrow money against that? For any of those things, you will need your documentation. Make sure that the documentation is in good place. Meet your investment banker and find out, or your financial advisor, whoever, and find out why you should be doing a SIP, which is a step-up SIP instead of just an ordinary SIP, right? Try to reduce your taxes as legitimately as possible. If you can't reduce, make payments. Please understand that even as a salaried person, you may be now forced to pay advance tax on your gains, etc., because there is one central CBDT which is picking up data from various sources, so they may force you to pay an advance tax. Be careful about that. Take all the money lying in a savings account and put it in one solid place and consolidate. Should it be in a mutual fund? Well, it could be in a mutual fund depending on how much you need. Suppose you have 20 lakhs as emergency money and you think at any point you will need only 10 lakhs. Then some part of your money can be in the equity market and coming back to you. And you also know that in the worst case scenario, it is only a matter of time that it will come back to you. So that's okay. I think I'm done with it. Thank you.